The Greek government have approved tough economic measures required for the 86 billion bailout package. But what are the next steps for Greece? Joining me to discuss this is Marc Ostwald from ADM Investor Services International in London. So Marc, what's next for Greece then?
Proving that the whole thing won't work, I think, is a simple answer. This is no solution. The governments of the Eurozone don't agree. The Greek government doesn't agree with it. In the long run, we've solved precisely nothing other than, for the time being, proving that the euro is not a revolving door currency in line with the way it was set up. But these problems aren't going to go away. Greece's debt-to-GDP ratio, if all of this goes sailing through 200%, it's just not viable in the long run.
German finance minister has said that a temporary exit from the euro is still an option. What are your thoughts on a temporary exit?
I don't really think that's a viable option. He's put a time frame on it, but these sort of time frames become very elastic. It's a sort of it's typical euro dirty compromise. I think essentially all that Mr. Schäuble is looking for is some way of finding a more substantive write-down of Greek debt when Greece is not in the euro area. But this is basically just it's almost like taking a bean counting approach to the legal system. Oh, well, the treaties don't allow for it and therefore we won't do it. But if you're outside of the eurozone for 5 years, we could do it. Is there any thought there for how the Greek economy might be reignited? Not really, none at all. So I don't really think this is a genuine option.
Now, the ECB kept interest rates on hold at 0.05% today, as markets had expected. What is your outlook for interest rates going forward?
Certainly for the Eurozone, one can say that interest rates are likely to be on hold not only this year, but also for the whole of next year. And looking beyond that really is looking into a big cloud where there's no point trying to speculate how things will pan out by 2017. We've got elections in France and Germany in 2017. These could all have very serious impacts and we will have got a lot of water under the bridge. But for the time being, for the next 18 months, certainly no change in interest rates in the Eurozone.
Data released earlier today showed year-on-year inflation in June came in 0.1% lower than that of May, still quite a bit away from the ECB's 2% target. So what is the ECB's current view and outlook for inflation this year?
A lot of it really depends on what happens with oil prices, and that's also a contingent on developments elsewhere, not only in Iran, but in broader terms on the way the oil production outlook looks globally. But if we assume that oil prices stabilize in their recent range, then we should start to, thanks to base effects, see inflation pick up towards the end of the year, but it'll still probably not be anywhere above 0.5% by December. There'll be further base effects kicking in next year, which should get us sort of somewhere to the 1.2 to 1.5% range, and then the ECB has a judgment call to make on the basis of how much momentum is there in inflation terms for it to be able to say we are now clearly headed back towards our target and therefore we could stop our QE program, or do they wait and see it much more convincingly close to 2%? There's a lot of water to flow under the bridge between now and then. My suggestion would be you may actually see, if the global economy picks up somewhat next year, you may see oil prices pick up a bit more next year, and that might be just decisive enough by the middle of next summer for the ECB certainly to be considering terminating its QE program.
And finishing off, how have currency markets reacted ahead of the press conference? And what is your outlook for the euro going forward?
Well, before the press conference, we got as low as 108 against the dollar, pretty close to 108. We had a bit of a bounce on the back of Draghi's statement, which I think some people had thought, given all the uncertainties surrounding Greece, given some uncertainties surrounding not only the Eurozone economy, but above all the global economy, specifically China, and to some extent the US, that he would be perhaps a little more dovish than he was in June. In fact, essentially the statement was effectively a repeat of what they said in June. So we had a little bit of a bounce on that. However, underlying everything at the moment is the whole principle that if we can get ourselves away from worrying about Greece, which I'm not sure that we can, but if we were to be in that situation, then you still have this divergent rate outlook, above all between dollars and euros, whereby we'll be looking for at least the Fed to make an initial move on rates this year, probably in September. And on that basis, the risks are distinctly to the downside for the euro. In the medium term, down to 105, perhaps as low as 1. It really, though, depends a lot on what happens in terms of geopolitical risks.
Mark, thank you very much for your comments. Well, that is all from me for today, but do join us again tomorrow for more news and analysis. Goodbye for now.